All right, guys. Markets are down again today. Look at the NASDAQ falling here. NASDAQ is effectively down 20% basically today. 20% has fallen down from 22,450 all the way down to NASDAQ is down effectively 20%. It's fallen down from 22,450 down to 18,000. It's about a 20% drop. You know, if you round, technically it's like 19.6 or something like that, but it's close enough. A lot of people are going to consider this a drop, and that's assuming it doesn't drop anymore today. But yeah, it's effectively down 20%. 20%. Y'all be careful. I've been telling you guys, I thought the market might correct, and it looks like that's what we've got. Yeah, y'all be careful. You know, people asked me yesterday, hey, is it time to buy? And I told them I'm not buying right now. There's too much stuff going on. You know, we got CPI next week, Jerome Powell today, non-farm payrolls today. We've had risks essentially everywhere. And so y'all just, again, you want to just be careful right now. Market's chaotic. Yeah, so again, the reason the market's down, about an hour ago, China announced extra 34% tariffs on U.S. goods from April 10th. 34% tariffs on U.S. goods. 34%. This is additional 34%, by the way. It's not only 34%. It's additionally 34% on U.S. goods over what they already had on U.S. products. So it's additional 34%, which obviously is not good. Obviously not good. Where's gold? I'm sure gold's flying today. Yeah, gold up to 3150s, getting closer to those all-time highs. If we take a look at oil, oil's down big. It's down to $61. $61. Bitcoin sitting at around the lower end of the range. Here's at 82,355. Bitcoin's only slightly red on the day relative to everything else. Apple, again, one of the big stocks causing these drops based on everything gapping down from 203 down to 190s. You know, I told people this too, man. I told people a very specific level for Nvidia yesterday that I thought if we break underneath that level, it's bad. Here is that. You can see that yellow line that we talked about yesterday. Let me put this up a little bit better here. But look at the yellow line. Again, we talked about this level yesterday. And look at what happens when we break underneath this level. We are now effectively under $100 a share. We're under 102, under the lows of the last 7 months for Nvidia. Apple under the 7-month lows, obviously, as well. Now it's down to 190s for Apple. Amazon down big. It's down to 160s. Palantir down to 70s. Microsoft down to 350. Nike down to basically $50 a share. Meta all the way down to 500 or so. So a lot of big drops. And again, this is ahead of the big non-farm payroll report that we got going on today, which is a massive report too. This is the biggest report of the week in about an hour and 15 minutes, an hour and 14 minutes or so. Hour and 16 minutes. Really, it's almost exactly an hour and 15. Yeah, so here's the timer for that too. Here's the payroll timer. So again, we got an hour and 15 minutes basically until this report drops. I'm sure it's going to be chaotic today. Have you said thank you? I mean, if you're talking to me, I told people I thought we would correct in December. So in December, I told people, hey, look, I think the market needs to correct. And this was before the big pullbacks that we've seen. And again, the reason I told people that, and something that I've said, I can honestly easily go find the clips of me saying that in December. Anybody that really watches the stream understands I said this. And we were right. We were right. But the justification for that logic in December and November, really, honestly, it was late November, early December. The justification for that thesis at the time was that the NASDAQ was up 105% on the year, or on a 2-year period, roughly 105%. It was up way too much. And those type of games are not sustainable. Like, we're going to correct if we put in manic, I should say, gains. We're going to correct like that sometimes. And we were right. And again, at this point in today, we're down about 20%. So down about 20%. NVIDIA is still cracking lows, over the last few hours, down to 97.30s. The new lows are 96.80s, and we're at 97.30s right now. So we're getting very close. The NQ new lows are right around 18,000. Apple at 193s. So yeah, it's a bloody market for sure. Yeah, now you guys see why I got flat in December, man. Again, one of the signs, and I've said this many times since then, but one of the signs that encouraged me to get out was mania. What do I mean by mania? Traders were manic, man. Investors were manic, I should say. Like, they're buying PE ratio stocks that have 600 PE ratios. They're thinking that it's impossible for a crash to happen modern age. They're thinking that we can never correct and that we're just going to go straight up. And they're insulting people who are nervous about buying at tops. They're making fun of people who are missing out on gains. Like, there's just all kind of stuff going on that made me NASDAQ up at 105% in 2 years at the time. This was in like November. There's just a lot of signs for this latest correction. And honestly, Warren Buffett got out way before me. Warren Buffett got out like 6 months before all of this stuff. So, yeah. Honestly, we called the top pretty freaking well, though, dude. Like, I got out around December and November. Here's December. Not going to say that's the greatest exit of all time, but it's definitely top 3. And remember, guys, I have no freaking idea what I'm talking about. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly, guys. Cannot guarantee anything here in markets. And understand CFTC 4.41. Not liable if you lose. Make your own assessments. Figure it out. If we get a recession or crash, where do you see the NASDAQ going? I mean, we're kind of we're close to crash territory, right? Like over 20%. Crashes are usually defined as like 20 to 25%, but we're pretty freaking close right now. We're pretty freaking close. Now, we'll see. Definitely third greatest. Yeah, but the people who called for a correction for over a year now, we're still above where they called the correction at. That's my point. Like, everybody wants to be right, but there's a difference. Are we above the level at which you called a crash at? Like, to put it into perspective, like, we broke the 7-month low yesterday. The 7-month low. Meaning, if you called a crash a year ago, we are above where you called it, and so that doesn't mean anything, All right. Again, look at the NASDAQ coming down here. NASDAQ down to 18,000 right now, 18,000. NVIDIA at 97. It's getting very, very close to testing this low here. And I think this is a big level too. Apple at 193s. 102.15, guys, I'm telling you. We broke 102s, broke down under 100s on NVIDIA, catapulted the market down. I tried to tell people this before the stream ended. And again, maybe the level was 100. I don't know. But we did, honestly, look at that 102. Look at this level right here. So again, we talked about this bright yellow level. Yep. Yeah, the VIX today is up to 40s. Which is crazy. $39.70, basically $40 on the VIX. Powell speaks again at 11:20, 25, I think it's today. We're going to stream it live, so don't worry. So subscribe if you haven't yet. We're going to stream all that live on stream as it happens. So stick around, guys. Stick around. It's a crazy day, honestly. Yeah, I'm looking at the rate expectations now. And one of the interesting things that we're getting from today is this. The May rate expectations is now 41% likelihood of a 25 basis point cut. 41% likelihood now. So the rate cut expectations have drastically changed. If we look at 10-year yields right now, if we look at the 10-year, they haven't opened up today, but I'm assuming they're going to be opening up under 40 with the big news with China's 34% additional tariffs on the U.S. If I look at, yeah, they're at 3.87s right now, 3.87s. So 10-year yields dumping down. Interest rate sentiment went down a lot. So people think interest rates are going to be lower now. Yeah. Look at Nvidia. Nvidia just broke the 7-month low again. 7-month low again. Apple down to 192.70s. Yep. Yeah, I kept labeling the Liberation Day movement Doomsday. And I did that for a reason. It's because I don't know what people thought would happen. I don't know why people thought we would have good reactions. You know, and again, I want the market to go up. It's not like I want the market to crash. I mean, I'm pretty flat in everything right now. I didn't like what I saw. I didn't like what I saw. I'm green on the year still. And my, I think I'm green. Hold on, let me check. I have to go check, but I didn't like what I saw. Didn't like prices. Didn't like movements. I don't know if I'm green on this year because I'm kind of flat. I got out in December, I think, but yeah, so again, we'll see if the market continues down, we're going to see greater likelihood of cuts in May. So next month, I think the Fed's going to start lowering rates. People are asking if we're going to do an emergency cut. I don't think so. I think the likelihood of a cut has to change for next month first. But who knows? Looking at our poll, 81% of people think this is a market crash so far. We're in the middle of it. All we really have to do is drop another 5%. We drop another 5 to 6%, I would say that's a crash. And if we take a look at the broad angle of this on a longer term chart, this is currently the crash that we're in right now. Or the pullback that we're in, I should say, right here. This is the angle of it. We break under this level, it's going to be looking rough for sure. I'll probably buy the dip, but I'm going to wait until we get some good action first. I'm not going to buy it right now. So I'll probably buy the dip, but I'm not going to buy it right now. Thank you to who, Bao? I'm definitely not in the red, guys. Again, I got out in December. You know? A lot of people made fun of me when I did, too. But you love to freaking see it. Honestly, I got out almost at the top. Like, here's December. You're talking about to the president. Okay, whatever. Yeah, what a crazy time. Crazy time. VIX up to 4220s as of now. NASDAQ breaking lows. NASDAQ under 18,000 as we speak here, guys. NASDAQ under 18K. Apple down under 191. Testing 190s. NASDAQ under 97s as we speak. It's down to 9620s here. Guys, the VIX up to 42s right now. VIX is up to 42s. 10-year treasury yield is dumping down now, which is good if you want lower rates. Likelihood of a rate cut in May has spiked. It's still under 50%, but it's 40-something% now. So greater likelihood of a rate cut next month, as opposed to a month or two ago when the likelihood of a rate cut next month was like 15%, and it's now 40-something% likelihood of a rate cut in May. Markets are coming down. Did you see Nintendo 2 news? Yeah. I'm not a big Nintendo guy. I'm really not. Like Nintendo, I love Nintendo back when it was like Legend of Zelda, Ocarina of Time stuff. Since then, the graphics haven't really kept up with capabilities of new modern games, and I mostly play other consoles. All right, we're still tumbling down. 17.9s here on the NASDAQ chat. 17.9s. Nvidia down to 95.80s right now. 95.80s. Apple at 190 here. Man. The VIX is up to 44s this morning. 44s on the VIX. Volatility is high. I will stop buying if the market drops 30% or more, most likely. Maybe 25% if we get confirmation in the upside. But if we start dipping down 30, 35, 40%, that's where I'm going to start to DCA, most likely. For me personally, I'm not an investment professional. Do not copy me, but that's where my buy level is, 30, 35%. Now, if we get some confirmation, like if we get some rebounds for like a month or two, that's different, and that might be a period where I start to accumulate some stuff. But I just got to wait for that confirmation. I'm certainly not buying here. There's too greater likelihood that we're going to keep dropping big percentages. Doesn't mean we're going to. You never freaking know. But again, are we at a level at which I feel comfortable buying right now? Long term, you're probably okay buying here, but I'm not telling you to do that because there's way too much risk for it. But long term, it doesn't matter where you buy it. You can sit on it long enough and probably make money. But risk management wise, I'm just going to wait. Yeah, so I'm trying to see where we close to see when the rules kick in here regarding trading halts. All right, so the NASDAQ closed at 18,648 on a percentage basis. 17.8 is basically where we're at. It is down 4.5%. The S&P 500 gets halted at 7%, 13%, and 20%. 7%, 13%, and 20% decline. So if we're taking a look at the S&P here, S&P closed at 54.21 for the S&P, at least the futures contract 54.21, and we are now at 52.10s or so at the lows. 52.10s are at the lows. That is a 3.89%. We still got a lot of room before we get a potential circuit breaker in the ES or the S&P 500 right now that I see here, at least. Well, I mean, so I think the tariff news and the reaction to tariffs certainly is going to create a greater likelihood of a recession just based off of the 34% additional tariffs on China. So, yeah, I mean, I obviously think the likelihood of a recession is going to increase based on the last few days. But again, I need to see the actual signs of it. So one of the things that happened yesterday that might go kind of the other way for that 7.5 is yesterday we had the Atlanta Fed GDP Now report. Originally, the Fed GDP Now report was 3.67%. They revised it. Now it's only 2.85% decline. So they think we're actually going to decrease less than expected. Now, if we get negative quarter this month, the big report, to be honest, for this is going to be this month's GDP report. This month's GDP report's big. This is probably going to be in a couple weeks from now. But the GDP report this week is going to be big. It's probably going to be towards the end of this month in about 2 to 3 weeks. That's a big report. That's really going to tell us where we are. Look at the SPY continuing to fall down here. Chat. The S&P continuing to fall down. Nvidia falling down big. And again, remember the levels I talked about, right? So like, let's talk about the levels that I was bringing up multiple times yesterday. Let's take a look at them. All right. One of them, if I remember correctly, one of them was 18. What was the level I brought up yesterday? Was it on the NASDAQ? I know I brought up Apple at 206, 205, 7-month lows on Apple. This big green level. And yeah, look at this big green level break here. That was a big level. Oh, here it is right here. I'm sorry. It was 206. And so look at 206 happen here. Look at that downfall. Again, we talked about Nvidia at 102.15. If you guys remember. 102.15. Look at that level here. 102.15 is right here. So I knew if we broke those two levels, it was going to push everything down. Now, this is kind of catalyst driven, though. I wouldn't really call a lot of this technicals. As much as I want to say, I told you so. A lot of this is fundamental economic catalysts from the 34% tariffs from China is what this whole drop is from that specifically. Again, China is now imposing additional 34% tariffs on U.S. goods. So they clap back at the U.S. today. We'll see what that means, but yeah. I think what a lot of people are going to be watching for is halts, and if the S&P gets 7% down and gets halted for a couple minutes. So y'all be careful today, man. Chaos in markets, to be honest, man. This is freaking nuts, dude. A lot of Christians were talking about a stock market crash bigger than the Great Depression. Yeah, but I think that's kind of like... Okay, I'm not saying they're wrong. All right, what I'm saying is that typically everybody wants to believe that their generation is the generation. You know, like they thought the world was going to end 100 years ago, 200 years ago, 300 years ago, 400 years ago. Everybody's generation thinks that their generation is the craziest and that our generation is it. And so, market being down 20%, I just don't know if that's that yet. Of course, they're going to say, see? But, when you look back at how many times this thing has been said, how many times people have said it's the end, everybody thinks it's their generation, but, Palantir dropping down to 79s, 78s, 77s at lows today. Getting a little rebound back up, though. Again, though, the payroll report in 50 minutes, guys, is chaotic. This is a big report. Yeah, again, I'm honestly really proud of myself. I'm not even trying to brag. I'm just really proud of myself that I thought we would correct, got flat, had that thesis in December, and that's basically the top. Really proud of that. And again, that's under a situation in which the last 4 or 5 years, people have been predicting market crashes over and over and over and over again, and I've been very critical of those people because people wildly overpredict market crashes. And they have for a year straight, in which they predicted a market crash prior to the AI boom, in which the AI market went such crazy heights in markets. And so obviously they were wildly wrong. You got YouTubers that wildly overpredict crashes. Like a lot of the YouTubers are acting like, hey, look how right I was now. But bro, they predicted a market crash literally every other week for years. And so if you look at where they predicted the first crash versus where we're at today, we're still huge percentages over where they predicted it. And so obviously wrong in a lot of areas there. And I've been pretty critical of people who overpredict crashes. I'm just proud that I was actually correct. Like the one time I predicted a correction, it actually happened. And I'm very proud of that because, this is in a world where everybody else predicts crashes over and over again to try to get views. And I'd rather just be real about whether I think we're actually going to crash or not. And so, yeah. Feels good, man. Feels good. Yeah, I mean, I'm not really talking about Bitcoin. I don't know what Bitcoin's going to do. I'm pretty open about that thesis, too. I like Bitcoin long-term, though, but short-term, who freaking knows? Pretty sure I said that verbatim at least 20 times over the last 2 years. I don't know what Bitcoin's going to do, Yeah, a 20% drop's not necessarily the end of the world either. I mean, it's not good, obviously. Some people are going to say we needed this drop, though, and including me to a certain extent. Like, I think we probably could I think a drop like this is somewhat necessary after the crazy gains the NASDAQ and the S&P and the Dow put in over the last 3 years. Like a little pullback dip, whether you want to call it a crash or correction, is necessary. And that's one of the reasons I had that thesis in December, is because 105% is way too high in 2 years. Like, the market's not going to sustain those gains, and when people think it will, I talked to so many people that I know in this stream as well as personally. A lot of them were like, yeah, the market can't crash. Modern market can't crash. And I'm sitting there like, dude, like, I have a text message with family that says it very clear. I think the market's going to crash sometime soon. And one of their responses was that the market can't crash. I think they said like IPOs or something like that. And again, that type of mania is why I think it's a greater chance that the market's going to correct, and why I thought it would. So it just feels good to be flat in this, because I feel like if I wasn't flat, I would be stressing out right now. I'd be stressing out. Yeah, I'm just glad I'm flat. I really am, I'm not really trying to hype myself up. I think that anytime you see a dip like this, a dip like this, a drop like this, and you're flat, that's a good feeling. Obviously, anybody, if it happened to you, you would be saying the same thing. You know, feels good, man. It feels good. When you're right, you're right, and feels good to be right in this instance. Because again, if I was holding my long-term investments, I mean, long-term, you're still probably good no matter what. I'm not telling you what to do. I'm definitely not telling you to buy, sell, hold, do anything. I have no freaking idea what you should do. Not an investment professional, but in honesty, I think if you hold long enough, you're still going to be good. You know, the people who lose the most during crashes, to be honest, are people who get emotional and sell after the big drops, right? Like if the market drops 20-30% and you're like, oh no, and you sell right there, a lot of the time the market's going to come back up and you're going to lose the 20-30%, and then you're also going to miss out on the rebound that happens generally following it over the next couple of years. And so yeah, long term, over 10, 20, 30 years, you're going to be good regardless of where we're at now. But short term, it's always, you know, variance and risky. Yeah, payroll's expected a little low, to be honest, too. The NFP data is expected at 137 for non-farm payrolls. So a little low. Honestly, last time I think we showed up at 140 or 150, and so we're honestly looking a little low, but we'll see if what happens. Yeah, where's GameStop and AMC at right now? GameStop down to under 22s, down to 21s. AMC, honestly, I haven't looked at AMC in a long time. AMC down to 250 a share. Getting hammered, man. Terrible. All right, so the California governor asked countries to exempt Cali from any retaliatory tariffs on the U.S., according to Fox. Yeah, again, I'm not messing with stuff right now. I'm basically sitting tight here. Like, I guess I could trade a combine account right now. We'll see how that goes. Yeah, I got a couple. We're so close to lows here, though, man. Here we go. Look at us edge closer here. So we started trading this. This is a combine account, guys, so don't be too strict on me here. But we are long. All right, we'll go ahead and cut that right there. We're up like 400 now after this trade. Yeah, we're up 260. Yeah, we're up about 400. Catching the market rebound back up again. Hey, just got another 200. So yeah, now we're up 600 on the day. about 3 minutes. So this is Apple chart right here. It's one of the things that sparked this drop because Apple and China have a deep relationship in terms of their production of iPhones and computers. You know, Apple produces a lot of things overseas. The margins, the products, the things they produce, deal with a lot of importing from China, and so these tariffs are really bad for Apple. They're one of the reasons the market started coming down. Apple's the most heavily weighted stock in the S&P and the NASDAQ. And Apple is one of the reasons this big correction started over the last few days. Look at this. So this is Apple. And again, the tariff news was bad for them. Bad for them. Their margins are going to be noticeably worse. A lot of people saw the correlation, and Apple started dumping. People started dumping Apple, shorting it, yeah. And so Apple is this left chart. This middle chart is NVIDIA, I think very relevant. You can see the long-term chart on NVIDIA now. Very interesting. Microchips have obviously been such a huge influence in markets lately, a huge influence in markets, and so we got NVIDIA up, and then we just got the NASDAQ 100. NASDAQ 100 is down almost 20%, roughly 20% from right now. So Bitcoin's honestly holding over 80,000. It's really not doing that bad. We got 40 minutes until the payroll report, 40 minutes until the non-farm payroll report. And again, this is a massive, massive report in the landscape of everything going on today with this brutal market correction. Apple only down 18%. Yeah, no, for sure. Apple, prior to the tariff announcement, Apple held pretty well relative to everything else. And honestly, Apple ripped up a lot prior to this tariff news over the last couple months. But, the tariff news sent it over the edge. You can kind of see here is April 2nd right here. So, yeah, that is April 2nd, guys. And yeah, April 2nd. Yeah, I mean, we got Jerome Powell. Yeah, another interesting correlation to watch today is the Fed rate decision. Almost 50-50 split now in the middle now. So again, at this point in time, we have almost a 50% chance of a rate cut in May. Prior to this, we had an 85% chance of a pause. Now we have a 50% chance of a cut. That has gone from a 15% chance of a cut next month to now almost 50%, 15 to 50. Very interesting here too in terms of rate expectations. If we take a look at bond yields, right? If we take a look at like the 10-year Treasury bond yield, this is actually much lower. It's at about 38.5% right now. So it's at about 3.8% yield right now, which again, if you remember some of the lessons I had yesterday, interest rates and yields follow each other, parallel each other, right? So with 10-year Treasury yield decreasing, that means we have a lower interest rate sentiment, which we can also see reflected in the CME watch tool now. People think we have a greater likelihood of lower rates earlier in May. So we'll see what that looks like next month. But essentially, markets falling, people are less optimistic, they're fearful, yeah. Yeah, I'm watching the NASDAQ very closely, but it's very choppy, kind of neutral right now. Yeah, so we have made $750 on the Combine account right now, just playing around with this. We'll see what happens when bond yields open, but they're opening up at about 3.8%, I'm pretty sure right now. Here's Apple rebounding a little bit. That's good, at least. All right, guys. It's very honestly, we've dipped a lot and now we bounce back. We're at 18,000, which is probably a pretty big level in the NQ. 18K. 18,000 seems to be a pretty big milestone level, I would assume, on the NQ. We'll see what that looks like. Yeah, I'm just playing combines right now because I can. What a crazy push. Here, so here's 18,000 right here. I want a text note. I want a line. There we go. There's 18K. I don't know if we get more red or not. I really don't. I'm just going to wait. Sit tight. Again, we got non-farm payrolls. We got non-farm payrolls and unemployment dropping. Today, unemployment rate expected at 4.1%. Payrolls expected at 137. They drop in about 30 minutes. If you haven't already, check out Top Step. Top Step gives you a 50K demo. If you can make 3K in profit without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split. That's what a combine is. It's a challenge account. I'm within I can't trade my funded accounts this morning because of the range of volatility. We're too close to halt levels and everything, so I can't actually trade my funded accounts right now. I have to wait. And so, yeah, but again, Top Step, great way to learn how to day trade. Most day traders lose. Doesn't matter what course you take, who you follow. Most day traders are going to lose in the beginning, especially. And the ones that actually do make money, it takes them years and years to to make money. And most of the time they lose money the entire time. It's called market tuition. And so you can either fund your own account paying that market tuition, losing, learning how to trade, or you could try a funded account program. It's $49 a month for Top Step's base one. They give you a 50K demo. If you can make 3K in profit on that demo without losing 2K first, following their rules and conditions, that's a combine. If you pass it, they fund you 50K with a 90% split, and you get to keep your first 10K in profit as well. No PDT restrictions. You can day trade the S&P, the Dow, the Russell, the NASDAQ, gold, some currencies. Very similar to day trading stocks. But if you fail, it's not the end of the world. You're out $50 basically. And while you're learning how to trade, that's a powerful thing versus funding 5, 10, 20, 30 grand into a account trying to day trade and get around the PDT rule. Most day traders have no risk management. They end up losing boatloads of money. And so that just doesn't make any sense. The funded account program makes way more sense. But I'm one of the top 3 most biased traders of all time ever in the world by now. I get paid by them, so, you know, I'm biased for sure. Understand CFTC 4.41, hypothetical or simulated performance have limitations. Not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly, guys. I have no freaking idea what I'm talking about. Don't copy me. But if you want to check them out, link is in the chat right there. Great way to help support the channel. There's the link right there. Top Step's paid out almost $200 million in the last 4 years. So one of the most legit ones in the world. And if you use Top Step X, which is their native platform, 0 commission, tiny amount of fees per contract. It just makes sense. All right, anyways, Microsoft rebounding, Apple bouncing back up a little bit, Nvidia bouncing back up a little bit. They're all down pretty big on the day, but again, this is leading into the non-farm payroll and unemployment report dropping in 30 plus minutes. So we're going to stream the data live. The reason we get thousands of people tuning in for this is because we cover it quickly. I don't know. Berkshire went wet. Did it really go red? Yeah, very high likelihood that rate cut sentiment is going to continue to rise as the market drops. We'll see what happens. Jim Cramer says he's disappointed with the president's tariffs and his administration, quote, screwed it up. Do you agree with Jim Cramer? All right, guys, so Microsoft bouncing back a little bit here. IONQ. Quantum stocks down big too, man. And again, guys, we're covering a lot of the stuff on our X.com page. We cover all of this live. We've covered every major breaking news story. What I try to do to filter this stuff is I try to report major relevant U.S. economic and market news, right? Like if it has to do with Europe, I'll cover it too if I think it influences the U.S. It's just a great place. If you give me a follow on X.com, you can kind of track what's going on in finance on a day-to-day basis here. It's at Beginner Trades, Check it out. Great way to help support the channel here. We appreciate the love, and let's keep the growth up, chat. Honestly, it's been growing like crazy. Honestly, it really has. If you want to check it out, here's the link. Yeah, gas. Look at oil, guys. So speaking of sub $2 gas, look at oil coming down today. Down from 66.60s down to $60, almost $60, even 60.8. So big decreases in oil too. At least we're gonna have cheaper gas, right? Maybe. Yeah, y'all go check out Beach Mom's live streams this weekend. Give him a sub. And yeah, the market's trying to bounce back. 97.60s here. Let's see if this continues to hold. What a crazy market this morning, guys. We got 27 minutes before non-farm payrolls release as well. 27 minutes before NFP data comes out. Hey, thanks, Jeff. Yeah, here's the NASDAQ here, chat. Is very, very crazy right now. Very, very crazy. Here's the NQ dumping down here. 18,128s. Yeah, we got payrolls and we got Jerome Powell today. 1120s. Mm. $18,100s. So I think this 18,000 level is probably a pretty big milestone level for the NQ if we're looking at something like this 18,000 level. You know, this 18K level is probably a pretty big milestone level. It's a level I'm watching right now. We'll see what happens. Made 60K with TQ. Silver. I always forget silver symbol. Is it SI? No. Is it? Yeah. Silver down to 31s. Where's gold at? I mean, silver's kind of following gold. Yeah, honestly. China probes DuPont. China on alleged anti-monopoly violation, according to Bloomberg. Yeah, China fear is what's dragging the market down. Again, the 34% tariffs, additional tariffs on U.S. goods is what's dragging everything down. Gold honestly coming down too. Gold's kind of red over the last couple minutes here, and it's red over the last couple days too, or red over the last 2 days. Gold hit all-time highs basically on April 2nd. Got up to $3,200 an ounce. It's now down to 3,100s or so, and it's been decreasing faster and faster. Kind of following the market in a macro sense, which is strange. It's not super strange, to be honest, but stranger than normal for sure. Whew, what a chaotic time. Gold is being bought at the lowest possible price. Yeah, I'm not really interested in buying gold right now, though. I've said this once, I'll say it again. I'm not really going to change my outlook on gold. Gold has been uptrending for almost a decade. It's not generally the best time to buy it. I'd rather buy it when it's downtrending, but you know, obviously I might miss out on some gains in gold too with that kind of mindset, but it's also a risk preservation. I mean, gold long term is probably fine, but you know, it can downtrend for a long time. And it's been uptrending for a decade. It's generally time to kind of make the pendulum swing back down to the other side for gold. And it's just not something I want to buy right now. And again, I understand completely that I might miss out on some gains, and I'm okay with that. I think, again, I'll say it once, I'll say it again. I think you got to condition yourself. Let me change the song. I think you got to condition yourself to be okay with missing out on stuff. Like, I don't have FOMO for missing out on something. Like, I don't need to catch every move in the market. There's always other opportunities. I'm not going to freak out because I missed something. It's silly. I'd rather just kind of be okay with missing out on stuff. And I might miss out on gold's run because of this, but I'm waiting for a pullback. Yeah, Apple hit 190s already, honestly. Look at Apple, it tapped 190s this morning too. And Apple's really one of the prime stocks that's dragging the market down because of the tariff news. You know, they buy a lot of stuff overseas and import it to make their products. That's why Apple's reacting so negatively to this report, is because they use a lot of foreign products on iPhones, and the margins are, you know, very clearly for a lot of investors, traders, you know, people looking at Apple, the margins are very clearly going to get worse, you know. That's why Apple's decreasing so quickly. Although Apple's only down, you know, under 20%. It's about the same as the NASDAQ right now. NASDAQ's down about, as it sits right now, the NASDAQ's down about 18%, 19% relative to highs. So we're still not quite in crash territory yet. There's definitely a correction as we speak, though. But if we start breaking down 20, 25%, a lot of people are going to call this a crash. Yeah, silver down to 31s. Silver's been decreasing too. All right, guys, we got 20 minutes left, 20 minutes before non-farm payrolls report. And again, the reason we get thousands of people here from this report is because we cover it quickly. They're expected today for non-farm payrolls, again, at 137 to 138 expected. We also have private payrolls coming out at 127. Government payrolls showing up. Last time was 11,000. Manufacturing payrolls last time showed up at 4,000, or they're expected at 4K for manufacturing payrolls. So payrolls for manufacturing expected to decrease from 10 to 4,000. U6 unemployment rate last time showed up at 8%. I'm very curious to see what that is today. Regular unemployment rate expected to show up at 4.1%, which is what it was last time. So a lot of stuff happening right now, guys. Y'all be careful. Apple's starting to kind of dip down to 193s, though. All right, guys. Yeah, everything's down. Honestly, we've dropped a lot. The momentum on the downside has kind of slowed a little bit here, and now we're kind of choppy sideways. Still got 18 minutes into this payroll report, though. All right, guys. Amazon shares. Where's Amazon at? Amazon is at 166. Where's Tesla? Tesla currently sitting at 250s. $250.50. Yeah, Nvidia also, guys. Again, Nvidia, we just covered Nvidia here. Nvidia at 97.30s. All right, guys. At 8:30 Eastern Standard Time. The NFP report is expected to show 137K. Unemployment expected at 4.1% today. 4.1%. And we also have Jerome Powell here. All right, guys, and we got our morningx.com post. I'll put it up right here. We got our morningx.com post here. It is right here. We got 15 minutes. Oh, wait, sorry. For whatever reason, it didn't tag it. Let me find it. Yeah, so we got our morningx.com post. Here it is right here if you want to give me a follow there. Kind of breaks everything down going on in markets today. Microsoft honestly rebounding back up. Look at this push here. So we're over 18K. We're bouncing back up to 18,183s. Tesla at 253. Apple at 194s. Nvidia all the way back up to over 98s here. So Nvidia back up over 98s. Is this some optimism ahead of the NFP report today in about 15 minutes? Again, we got Jerome Powell at 1125 today. Yeah, Microsoft surging up too. Microsoft up to 361s. Palantir's back up to about $80 a share. I don't know if it's going to hold. Oh, yeah, let me edit this. 250.50 is what I meant to put. There we go. I updated it. It's better now. Yeah, I fixed it. Sorry, guys. It'll be all right. It'll be okay. NASDAQ bouncing back too. My only green on my watch list is Coca-Cola and Pepsi. Yeah, KO and Pepsi have been pretty solid. I mean, they're not green either. Coca-Cola's down. It's at 72.90s. It closed at 73.20 or so. Pepsi is green. Pepsi closed at 151.30s. It's at 152.30s. So it's up about $1 a share, about 1.5% in pre-market. But yeah, again, almost everything's down. All right, guys, 12 minutes. We got 1,500 people here. Hey, y'all help me grow. Hit that subscribe button. Hit the notification chat. We appreciate it. Yeah, yesterday we had jobless claims. Speaking of the employment report, we did have jobless claims, unemployment filings show up yesterday. They ended up showing up at 219, lower than expected, signaling less people filing for unemployment than expected. And that's a good thing, of course. Like, that's an optimistic, like, that's what you want, is less people filing for unemployment. Yeah, so you can look up, like, where do you see what percentage is considered a crash? 20% or more in a major stock market index within a short time frame, few days or weeks. So I don't know if this is even going to be considered a crash. This might be considered a bear market. I don't know. Let's see. So here's a weekly chart. Right? 1, 2, 3, 4, 5, 6 weeks. I don't know. It's right on the cusp of whether it would be considered a crash or not. It's definitely a correction in markets. Definitely a correction. All right, guys. Yeah, blood is definitely in the streets. I don't know. We don't know if this job report is going to be good or not. It's expected at 137,000, 137K. So Powell speaking is going to be big as well, obviously. This is an important release. We got 10 minutes, chat. 10 minutes. It is a recession. I mean, we don't really know that yet. We have to have 2 consecutive losing GDP quarters for it to be considered a recession. A stock market crash is not the same thing as a recession. It's just a different thing. Again, maybe we're heading towards one, but we're not there yet because we haven't had 1 negative GDP quarter, let alone 2. And so you got to go by the technical definition of a recession, Yeah, I did a poll on sentiment. I asked people, is this a market crash? 75% say yes, 25% say no. Well, if you're talking about the change definition, the new definition would mean even more strict conditions for a recession, which would be 2 consecutive losing GDP quarters, as well as high unemployment, right? Either one of those things is not necessarily true as we speak, And again, if you were one of those ones preaching the technical definition a couple years ago, you can't say we're in a recession now because we're outside of the technical definition of it. Again, market and economy are 2 different things. Now, a payroll report, very interesting to watch based off of all this stuff to see where we're at economics wise. But yeah. Hey, bro. Love you, buddy. Have a good day at school, dude. You got free dress today, man? Huh? Everybody say hey to my son, Jack. We got about 1,700 people watching right now. Everybody say hey to my son, Jack. What do you got to say today, bro?
Hi.
The market's crashing right now.
Yay?
No, not yay. I mean, I don't know. You could yay that, I guess. See, that's you right here, look. There you are. Love you, bud.
Love you.
Have a good day at school, dude. Okay. Love you, buddy. Have a good day, man. You alright? Alright. Have a good day, dude. Love you too, buddy. Alright. That's my son, Jack. That's my son, Jack. He put a cap over my thing right now. He said buy the dip. Gotta catch back up on the chat, man. Everybody loves Jack here. I should bring him on the stream more. Yes, Jordan, I would. Honestly, Apple dipping down here. So look, prior to this payroll report, we got in about 7 minutes, 6.5 minutes. Market's starting to retest these lows. Look at Apple turn down here. Apple at 191.70s here, 191.70s. NASDAQ at 18.75 here. You know, Warren Buffett cut his positions a long time ago. You wonder if he could predict all this stuff, if his quants thought this stuff was predictable. Well, the market, NASDAQ's down about 20% right now, right? So the NASDAQ is down about 20%. At the lows, it was down about 20%. A lot of people are going to consider that a crash. We got a little bit more to go, but I don't think rounding up and calling it a crash is crazy right now. It just depends, you know. Jack anticipated the crash. Yeah, 7%, guys, is the level at which... 7% is the level at which the market falls. Or the market gets halted. The S&P gets halted at 7%. So a big level you want to pay attention to. Right, we got 1,800 viewers here. We got 6 minutes left, chat. 6 minutes. Coolest dude in the room. Definitely coolest guy. Yeah, I think his yay was kind of sarcastic. Though he was kind of like, yay? You know? Like, I think it was that. I don't think he was genuinely celebrating a market crash. Maybe he's just playing off of my energy. I don't know. He's a good kid. Good kid. All right, guys. We got about 2,000 viewers here. We still got 5 minutes before payroll numbers come out. I'm wondering how much of a dip payrolls are going to put into the market here, too. Based off of everything going on, man. 10-year treasury yields at 3.9%. So yields are down. Again, I'm sure looking at payroll numbers here. We got CPI next week as well, chat. CPI next week. Whew. Be ready here, chat. Be ready. Here we go. 4 minutes, chat. 4 minutes. Yeah, I've got a 15-year-old too. Yeah, they grow quick, bro. They grow really fast, honestly. They really do, man. They grow quick, man. It's kind of sad. The link is the promo code. There's no promo code. There's just the link. Use the link. Will the market rebound or not here, guys? Say yes or no in chat right now. Yes or no. Will the market rebound? I'm going to put some scary music up based off of... Wait, where did my music go? Hold on. We got the Fed Watch tool here. We're going to exit out of that. We got this Fed Watch tool here. We're going to exit out of that. We got... How many Fed Watch tools do we have up? Let me exit out of that. Let me exit out of this. Sorry, guys. It might fly... The screen might kind of blip a little bit here. I'm trying to find my music. There it is. All right. Let me find some music here. Are you guys ready? Seem dark. All right, guys. We got 3 minutes. 3 minutes. I love you.
Love you.
Have a good day. Yeah, he's coming in. Love you. All right, guys. 2.5 minutes here. 2.5 minutes. Two minutes. Apple down to 193s, hit 192s for a split second. Although the market's kind of climbing back up. We'll see if the payroll report bumps it back down or not. Y'all be careful here, chat. We got 2 minutes. 2 minutes. We got 1 minute and 40 seconds. Hit the live button next to the play button. The reason we get thousands here is because we cover this quick. So be ready. We got Jerome Powell later on today too. Unemployment expected at 4.1%. Payrolls expected at 137s. Will this break the market down? One minute left, chat. Hit the live button next to the play button. Here we go. Payrolls coming out soon. Payrolls dropping soon here. You guys ready? Let's see what payrolls give us here. Oof. 30 seconds here, chat. 30 seconds. This timer's a little bit early. I'm going to pause it. We got 30 seconds. 25 seconds. 15 seconds. 10 seconds. 9, 8, 7, 6, 5, 4, 3, 2, 1, and here's the report. All right, payroll showed up at 228,000. 228,000 payroll showed up here, you guys. 228K versus 137K expected. Much higher payrolls than expected here, guys. Much higher payrolls. Stronger economic report. Much higher payrolls. Gold is falling down, and the market's honestly rebounding back up a little bit. It showed up 228,000 non-farm payrolls. The U6 unemployment rate showed up lower than expected at 7.9%. Unemployment rate showed up higher than expected, though, at 4.2%. Chat, higher than expected at 4.2%. Unemployment versus 4.1% showed up at 4.2%. Private non-farm payroll showed up at 209 versus 127,000. Non-farm payrolls 228K versus 137K expected. Manufacturing payrolls showed up all the way down at only 1,000 manufacturing payrolls versus 4,000 expected and 8K last time. Average hourly earnings showed up at 0.3% flat as expected. And then if we look at the private non-farm payrolls, 210, basically 209. Participation rate was 62.5%, guys, 62.5%. Unemployment higher than expected. Payrolls higher than expected. Kind of mixed data here. Not really the biggest influence, but kind of mixed data. Again, unemployment rate showed up higher than expected at 4.2% versus 4.1% expected. Regular payrolls showed up higher than expected at 228,000, 228K. Now, again, guys, a lot of people are going to start yelling stagflation right now. Stagflation is what a lot of people are going to yell. Higher unemployment, higher payrolls, which might signal high inflation problems. All right, so we're going to put this post out as well. All right, guys, market honestly hasn't really moved that much at all. The NASDAQ here has only Like went up originally and now it's back down. So honestly, with the landscape of everything going on, I'm wondering if this isn't really gonna move markets much at all. Honestly, we got Jerome Powell later on today. Look at gold starting to turn down here. I'm gonna put up the Dixie, the dollar index, the dollar strength index. And obviously it is down week today after everything going on, but this payroll report might honestly help it. Look at the Dixie bounce, gold coming down, and honestly the Nasdaq's pretty flat on this report. It hasn't really moved in any significant way here. So very interesting, guys. And again, stick around. We are going to trade live. We're also going to be streaming Jerome Powell later on today. So if you want a one-stop shop that covers all this stuff live, as soon as it happens, subscribe, hit the notification bell. We appreciate it. You can also check out Top Step if you want to learn to day trade. Do not fund your own account. Almost all day traders lose. I try to be honest with people. Like this is my second plug all day in hours. I'm biased because I get paid by them. But honestly, if you're trying to learn day trading, this is what you should do, in my opinion. But I'm biased. Don't copy me. Your risk is $50 for the base one. If you can make $3K in profit on a $50K demo without losing $2K first, following their rules, they fund you $50K with a 90% split. You get to keep your first $10K in profit. Prior to that, if you fail, you're out $50. It's the best of both worlds. Limited risk, similar reward to funding your own account. And if you're good enough, you can get funded, build up profit, withdraw, and then fund your own account if you want. But if you fail, you're down noticeably less, like $50 for the base one. Not an investment professional. They're an affiliate of mine. I get paid by them, so I'm biased for sure. Top 3 most biased in the world right now, but genuinely useful for traders. They've paid out almost $200 million. If you want to check it out, here is the link. Great way to help support the channel. We try to cover this stuff live, give you guys economic reports. Now, again, payrolls showed up stronger than expected. In a market that fears economic weakness, we are starting to rebound back up a little bit after this report. Look at the Nasdaq start to pump up. It's at 18,221 right now. It's over the 200 exponential moving average, and it did hold strong on this report. We could take a look at a stock like Apple here and see that Apple back up a little bit from this report. It was getting pretty close to these lows, but it's not really... I don't know if this report can save us from weakness today, guys. I really don't. I don't know if this report can save us from weakness. Let me know if you think we're going to break the lows of the day again today sometime in the next few hours after the opening bell. Do you think we crack lows again today and continue down? Or do you think we bounce back, guys? Let me know. But again, the data showed up. Let me put the data up on screen. Payrolls, again, showed up at 228K, much higher than expected at 137 here. Chat, much higher than expected at 137. Again, I'm going to put this up on screen. We got Jerome Powell coming at 1125. So we got payrolls on screen now. Markets reacted positively to this report. Unemployment rate showed up higher than expected at 4.2%. Are we in a stagflation economy, guys? Stagflation is a period where we have weak economics and high inflation. Yeah, guys. Whew. Chaos going on right now. Chaos. All right, payrolls did show up hot here. Let me fix this. There we go. Yeah, so we did show up stronger than expected here, guys. Stronger than expected. Yeah, and again, honestly, a lot of people are going to say we are market crashing right now. Is this a market crash, guys? We did a poll over. We did a poll earlier. All right, so again, the U.S. employment data is out. Payroll showed up a pretty big amount higher than expected. The market initially reacted positively to it. Now it is dipping down here, chat. Now it is dipping down. Again, we got the unemployment report out already. All right. Yep. And again, we'll see if the market holds now. Yeah, we're going to be trading the open live here, chat, so y'all be careful, man. Whew. Yeah, so we're going to be trading futures at the opening bell today too, I think. But payrolls are out. Unemployment rate is out. Look at gold start to come down. Look at the NASDAQ start to come down as well here. Remember, the lows are way down here, though, at about 17,820s. 17,820s. We hit those at about 6:15 market time this morning. Or wait. No, I'm sorry. We hit these, yeah, about 7:15 market time this morning. Or no, I'm sorry. That's actually correct. So we hit these at about 6:15 market time this morning. We're starting to test down. Watch the $18,000 level. Watch 18K. Yeah, it's Friday. We ain't got no job. We ain't got ish to do but watch the market fall. You know. Gold coming down to 3100s here. Gold down to 3100s. NASDAQ has rejected around that 200 exponential. Apple still decreasing. I think if Apple cracks this 190 level, it's going to pull the market back down as well here. Look at gold fall. Number showed up at 228 versus 137K expected. 228 versus 137K expected. Unemployment showed up at 4.2% versus 4.1%. Expected. The U6 rate showed up at 7.9, which is actually a little bit lower than the 8% it showed up last time. Private payroll showed up at 209 versus 127K as well. Government payroll showed up at 19K versus 1K last time. So a lot more government payrolls than expected and then last time. So, and then we got Powell speaking again, 11:25 market time. So. And again, stick around. We are going to be trading the opening bell live as it happens. Ooh. Ooh. Stuff's going down today, guys. Gold falling down, man. It's honestly good for my channel. Cheers to you guys. I appreciate the love, the growth. Gold down to 3090s. NASDAQ at 18120s. Apple at 193s. Hey, what's up, Faye? Yeah, appreciate the love, guys. Thanks so much. We've grown a lot, honestly. We really have. It's been fun. All right, guys. We got about 48 minutes left. 48 minutes until the opening bell. That's going to be chaotic. That's going to be chaotic. Looking at our poll numbers here, we asked people, is this a market crash? We got 2,500 votes roughly. 73% say yes, this is a market crash. NASDAQ is down over 20%. It's not quite 20% yet. If we take a look at the calculations here, right? So the highs of the NASDAQ are 22,450. 22,450. The lows of this recent run, if we look at the low of this candle here, which is a daily candle, the low of today is 17,820. 17,820. So 17,820 at the lows. 22,450 at the highs. Makes the NASDAQ dip. Oh, you're correct. So the NASDAQ at the lows today is down. If we average up, if we round up, is 21% down. Relative to the market highs down to the lows of today, that is a 21% drop. A 21% drop in the NASDAQ 100. So, yeah. A lot of people are going to consider this a crash, chat. A lot of people are going to consider this a crash. Crash is over 20% short term. Now, whether you consider this crashes depends on semantics, but yeah. All right, so look at the, again, the NASDAQ's getting pretty freaking close to testing that 18,000 level. Apple's down big. I'm watching Apple very close. Apple's kind of the stock that has dragged the market down. You want to know why the market's down? Apple cracked 7-month lows. Apple's getting beat up because of the 34% announcement on tariffs yesterday, or earlier this morning, as well as the implementation of tariffs on China as well, right? So Apple and China have a close relationship in terms of manufacturing and production of iPhones and other smartphone and Mac products. With that, Apple's margins are going to get worse on all this tariff trade war news. And so in that regard, Apple is down big. It's broken down pretty big. Although Apple might be lagging a little bit behind the market, to be honest. But one of the reasons the market slumped is because if we look at like a 4-hour chart here, let me actually put up a 30-minute chart instead. Here's the April 2nd speech here. So Apple is one of those stocks that has gotten just pushed down really, really big, just dumped down really, really big here. So yeah, we start dropping 25, 30, 35%. I'll probably start adding to it. And you got to understand, guys, in every single bottom in history, somebody's telling somebody it's not the end yet. You know, like when I bought up the market in 2020, I bought up United Airlines, MGM, a bunch of other stuff too, because I thought that we would rebound pretty quickly. Everybody told me the bottom wasn't in, that we were going to drop much more and all this different stuff. And then the market ended up flying back. I had some of the biggest percentage gains I had ever had at the time. Trading, and again, those are trades that people made fun of me for getting in at the time, and so I'm not saying we're there yet. I'm not personally interested in buying right here, but if we drop another 5, 6, 7, 10%, you know, I'm probably going to start getting pretty interested in buying up some stuff. But again, I'm waiting. And again, just to clarify, I called this correction. I got flat in December. You know, honestly, it feels good. Like, I'm not stressing about these dips at all. I'm not, again, I'm flat. I'm not in anything right now. I got flat in December. If anybody's watched my stream long enough, you know I got flat in December. And feels pretty freaking good to miss out on this move. And again, the logic in December, I said it over and over again. I could probably easily find multiple clips of me saying this in December. NASDAQ at the time was up 105% in 2 years. 105%. And what I said was the market needs to correct. It needs to come back down. It's up way too much. I was seeing mania in buys. Nobody thought the market could correct, and that made me think the market was going to correct. Everybody was just manic on the upside. That made me change to get pretty flat in December, and at the time, I was nervous about getting it. I thought I would miss out on some moves. In hindsight, that was the right decision. I got out almost near the top. It feels pretty freaking good. No, I'm not a big shorter, guys. I'm really not. Like, I'm not gonna short. I'm just gonna get flat and then wait to buy again. I'm not a big shorter like that, you know. And again, most of the influencers that are acting like they're geniuses right now, a lot of them have been saying the market would crash every other week for the last 5 years straight, and they've missed out on some of the biggest moves, and they've shorted the top of some of the biggest upswings in market history, right? If you look back at the history of their content, a lot of them have been saying the market was going to crash literally every month, every other week for some of them. in for 5 years straight now. You know, so even if we do crash at these current levels, they're still wildly wrong because we are still light years above where they said we would crash and where they shorted originally. And so, of course, a lot of them, you know, you keep throwing darts at a dartboard, eventually you're going to hit it, right? But there's a difference between that and this is basically the only time I've predicted a crash or correction. And feels good, man. We got it right. I mean, I made money, Stefan, but in a different way. Like, I saved myself from losing a lot. And I think that's just as good as making money, you know? Again, I think the biggest statistical edge is on the upside. I think market crashes are wildly overpredicted. And again, this comes from me seeing big influencers, traders, predict market crash literally every other week. Blinding traders. And again, you throw darts at a dartboard, eventually you're going to hit it. You know, they're probably like 1-6, 1-7 right now, but they're acting like geniuses. The truth is, the biggest statistical edge is on the upside. Market crashes are wildly overpredicted. And in the end, I would rather just play the biggest statistical edge. And if I'm nervous about markets, I'd rather just get flat versus shorting the top. Just because I think there's too much risk to do that. I would rather just wait for a more opportune time to buy versus trying to top pick the healthiest companies in the world. I don't think that has a long-term statistical edge for most people. And I think people watch movies like The Big Short and Michael Burry, who's predicted about 15 crashes in the last 10 years. And they romanticize that type of behavior, you know, but it's so rare to be able to predict a market crash like that and make that big of money without calling at least 10 crashes prior to that where they're wrong, that they make movies about it when people do it correctly. So yeah, I just understand, like, we're down a lot right now, but this was an inevitability, to quote Thanos. Like, it's gonna happen. Like, eventually we're gonna crash, we're gonna correct. It's just a natural movement of markets, human nature, mass psychology, whatever you want to call it. But it doesn't mean a lot of them were right. Yeah, and again, I think it's an interesting spot right now. We're down about 21% in the NQ. If we're talking about lows of today, we're down about 21% in the NASDAQ relative to highs. Highs are 22,450. Lows are 17,820. Do the math. It's 20.6 something percent. 20.6 something percent. A lot of people are going to consider that a crash. Right now, it's a little tricky. A crash is considered a short-term drop. This was 6 weeks ago. We were at all-time highs. I consider that pretty close to a freaking crash, especially if we drop another 5%, 4%, 3%. It's pretty, you know, I'm going to consider that a crash personally. But it doesn't mean anything yet. We could keep dropping. We could bounce back. Again, once we start getting into 30%, that's kind of my area where I want to buy. 30%, 30, 35%. That's kind of my buy zone. But everybody's different. It doesn't mean you should copy me. I'm not an investment professional. I have no idea what you should do. Powell speaks at 11:25. It might be in big yellow letters right here. You know, might be, could be. Oh, so many people were wrong about some big brutal correction 3 years ago. People made fun of me for thinking that we weren't necessarily going to have some big brutal correction. And so, but a lot of people were wrong. Honestly, it has to do with banks. When this happened, guys, like, look, so when this dip happened, right? And again, a lot of people are going to celebrate and act like they were right, but they've been predicting crashes on YouTube since this right here, right? And this is an instance where I criticize crash predictors. I started buying up a lot of this stuff here because I didn't think we had to drop more right here. And I didn't think we necessarily were going to enter some deep recession either. And big banks put out all this media saying the market's in turmoil, we're going to enter a recession, all this stuff. And retail traders just jump on board because it's kind of music to some of their ears at this point right here. And then a lot of people made fun of me for being bullish right here. A lot of people made fun of me for being bullish. They said the market was going to keep coming down. Some people said the SPY was going to drop 80%. 80%. And then once the market started doing this, it's kind of crickets, kind of silence. We had one of the strongest bull markets in history follow it. And who profited from it? The big banks did. Who missed out on it? A lot of retail traders. Why? Because the big banks told them that we would have bearish, sketchy action, recessions, and all this different stuff. And so in the end, you got to watch what they do, not what they say. And a lot of them made a lot of money on this big bull run over the last 3 years, which is one of the reasons we're correcting now, because we're just obscenely high after the last few years. The AI boom, NVIDIA, all that stuff dragged the market up. Now, there's some also arguments against buying here. You know, here's the problem, is that a lot of this parallels the dot-com crash. And what I mean by that is that in the late 90s, internet companies were taking off. We had the technology of the internet sprouting up. It was very new. A lot of dot-com companies IPO'd, changed the standard of IPOs to a certain extent, and made billions of dollars IPOing at a time where it was really difficult to IPO before you had a couple years of profit on your books to go public, right? But Netscape, other IPO companies in tech, in the internet, changed that. And we had one of the biggest crashes and the longest bear markets in history that followed it in 2000. You know, we downtrended. Part of it was because we also hit the mortgage crisis in 2008. But, you know, we could keep going down here, just to clarify. Like, you might hear me say, hey, we drop another 10% or more, I might start buying up. But you got to understand, we could also just keep on dropping. It doesn't mean anything. Nothing's definitive. There's a lot of variance with this type of stuff, and you just want to protect your account at all costs. You know, whatever that means to you. So just be careful. Yeah, we'll see what happens. Appreciate the support, guys. Appreciate it. Gold's still falling down. NASDAQ at 18.2s. And in the end, guys, like, listen, the reason, like, okay, we had this argument yesterday. And the argument was, what is it better to be a perma bear or a perma bull? And so let's talk about it. Okay? If you say anything besides, if you think it's better to be permanently bullish, or I'm sorry, let me backtrack. If you think it's right to be permanently bearish in any market, you don't understand finance. You know, what I mean by that is that the biggest statistical edge the market ever gives anybody ever is on the upside, long term. Over decades, markets going up almost certainly. You know, compound interest is one of the most powerful things you can do on the upside. The longer you hold an index like the S&P, the NASDAQ, the Dow, the more likely it is you make money. Versus the longer you hold a index on the short side, the less likely it is you make money. And that's a powerful edge. It's a powerful statistical edge. And so when I say I might start buying up stuff, I might be down for years. But over a long period of time, 10, 20 years, I am going to make money, especially if I implement a DCA strategy into that, where I add periodically, you know, every month 50 shares, 100 shares, whatever my DCA strategy is going to be. I don't know. It doesn't freaking matter. But I'm gonna make money on that system long term, almost certainly. Nothing's 100%, but you know, we're looking at a century plus of market data here, and this is something that big money understands better than anybody, and this is something that retail traders get wrong more than anybody, is that they romanticize the short side to a point in which they think it's always better to be short, and that is a ridiculous thing. And so just understand what the true edge of the markets is, regardless of this crash that I was lucky enough to be flat on. The biggest statistical edge is on the upside, but not an investment professional. I have no freaking idea what I'm talking about. Might be wildly wrong about anything and everything I say, including this. Don't copy me, but I don't think I'm wrong there, you know. Yeah, but even if you think the U.S. is collapsing, right, which I don't think it is, but even if you did, you got a lot bigger problems than your investments not playing out if that's the case. You know, the money you would make wouldn't mean anything in that regard anyway, right? Like, I hear people all the time like, oh, don't buy bonds, bro. What if the government fails? It's like, well, if the government fails, you got a lot bigger problems than your bonds not paying out, bro. You know, It's going to be irrelevant anyway in that situation. You know, so just be smart. Like, this is what big money understands. Long term, long is key, you know. Jiu-jitsu, honestly. Top 3 worst blue belt of all time here. But jiu-jitsu, man. Funnest sport in the world right now. Funnest sport in the world. Honestly, if you like video games, learn jiu-jitsu. That is so much fun. To be able to just, you know, beat people up very easily in grappling, it's so much fun. It really is. It's like a video game. If you got ADHD, it's even more fun because you can hyper-focus on that stuff. Just do it, you know. It's fun. Keep you in great shape as well. I honestly haven't been sick in years since I started training jiu-jitsu. I haven't been sick once. Not once have I been sick in years, which is crazy, to be honest. This will turn into the largest bull market of all time? Maybe. Maybe. All right, guys. It is 9 a.m. We got 30 minutes until the opening bell. We got Big Papa Powell coming out live in... Powell speaks in 2.5 hours. Roughly 2.5 hours. Yeah, honestly, I would think I would get sick more because of the close contact, right? Like, that was I thought as well. I really genuinely have not been sick in years since I started. And I train 3-4 times a week usually. And so, very strange. Very strange. Jobs report was higher than expected. Hot. Payroll showed up at 228 versus 137. Unemployment spiked to 4.2%. So yeah, everything came in higher than expected mostly. All right, chat. Whew. My coffee stopped tasting like sludge, though. Tasted like sludge for a while, you know. I figured out the sweet spot is about 6 to 7 cups with 8 or 9 cups of water. 6 or 7 scoops with 8 or 9 cups of water. If you put 8 to 8, sludge. All right, chat. Powell's talking about economic outlook is what it says. And again, we're going to cover it. Markets are rebounding back up, though. We're over the 200 exponential. We're watching Apple pretty closely here. Gold still sitting down there at 3090s. Here's Apple creeping back up to 195s. NASDAQ over the 200 exponential at 18.2s. Inflation-y? What about stagflation-y? Inflation is a good thing. Deflation is a disaster. I mean, inflation is good to a point because it signals economic growth. And while I understand that, the rate at which inflation has climbed over the last 4 or 5 years is not sustainable and should freak everybody else out. You know, again, it is not sustainable and it should freak everybody else out. Inflation can be good. It signals economic growth. All right, so the president just posted about 15 minutes ago. He said, to the many investors coming into the U.S. and investing massive amounts of money, my policies will never change. This is a great time to get rich, richer than ever before, end quote. He said, president said, quote, great job numbers, far better than expected. It's already working. Hang tough. We can't lose, end quote. Do you agree with the president's statements here, chat? PayPal expanding crypto offerings with new tokens Chainlink and Solana. Yeah, I mean, inflation should scare everybody. I mean, I'm self-employed, so I really don't want inflation to happen because, you know, again, I'll say it once, I'll say it again. $100,000 a year in income used to mean something. And I'm sure a lot of people that might make only $100,000 right now are like, what, bro? Listen, 100K is not what it used to be. Prices are too high for that to be meaningful anymore. You know, 100K used to be a big milestone level, a big status symbol. Oh, I make 100K a year. The problem is that prices have increased 2, 3, 4x over the past 5 years. That's bad. That's not good in a lot of sectors. In some sectors, they haven't. But in a lot of sectors, food, so forth, prices have gone up way too much. And I would much rather us, to be completely honest, enter a mini recession and stabilize pricing versus inflation spiking up again and having some rolling economy. You know, I really would, right? So basically what happened, I'll give you the economic landscape of the last 5 years so you can understand this. And if you don't understand economics, you know, listen to what I'm about to say and it'll make sense, hopefully at least. All right. But 2020 happened. When 2020 happened, the Federal Reserve, their job is to keep things balanced. So they jumped in and did a lot of economic stimulus. They lowered interest rates because when interest rates are lower, people spend more, businesses expand, they have cheaper access to money, and this causes economic growth from that low interest rate environment. A more desperate move to save us from everything in 2020 was to do a form of money printing called quantitative easing, and this is when the Federal Reserve creates online bank reserves and then uses those bank reserves, creates online money bank basically, and then uses that to buy up financial assets like bonds and MBSs. This injects liquidity into the economy and ultimately helps interest rates as well. And again, all this stuff stimulates the economy. Another thing we did in 2020 was we sent out stimulus checks, gave people essentially free money. And another problem of 2020, outside of everything crazy going on in 2020, was supply chain restraints. Supply chains were shut down. All of these things, all of it, low interest rates, quantitative easing, stimulus checks, and supply chain problems contributed to very high inflation spikes after 2020. So in 2022, we had inflation spike up to almost 10% for CPI, 7% for PCE inflation, which is what the Fed looks at. Crazy, crazy high inflation. And so then the Federal Reserve has to kind of play the other end of it, where they have to be what's called hawkish or restrictive in interest rates. The way they do this is they do a bunch of rate hikes. They raise interest rates, try to push the economy down a little bit, because when people have less cheap access to money, they spend less. Businesses lower prices, and to a certain extent in that regard. At least that's the goal of it. They can also do what's called quantitative tightening, which is the opposite of QE essentially. It's not direct QT, which would be straight up like selling their bonds, but passive QT is what they did, which is they let their current bond holdings mature and run off and basically expire off of their balance sheet. This is a restrictive stance, takes liquidity away from markets, and ultimately, you know, restricts the economy to try to push inflation down. Right. And it kind of worked. If we look at inflation rate, if we look at like CPI inflation in the graph here, you know, it kind of worked. We see inflation, the rate at which it's growing, start to slow. And so here's the CPI inflation rate. You can kind of see 2020 happen here at the top of this. And you can kind of see inflation did start to slow with the Fed's restrictive policies. And now we're about right there. And we have CPI inflation next week. We're right around here now. We got CPI inflation next week coming out. I think it's Thursday and Friday next week. And so the goal worked. But the problem is that one thing that you'll see is this is just inflation slowing. Inflation almost never goes down. The only time inflation literally decreased, meaning prices actually drop, not just the rate at which they're increasing slowed, but prices actually drop. The only time that happened was 2008, 2009 mortgage disaster crisis. And so basically, prices don't go down. They slow down. And so once they go up, we're stuck with them at those high prices. And so over the last 5 years, a lot of prices in different sectors have gone up 2 or 3x what we used to pay in 2019 and before that. And so we're stuck with those high prices still. But now that the Federal Reserve has been doing restrictive economic policies, we're also seeing weak economic data in some areas. Payroll data came out stronger than expected today for sure. But now the risk is that we're going to have something called stagflation, which is a weak economy as well as high inflation, and it's called stagflation. That is kind of what we're seeing now, where we've seen some inflation data like PCE inflation show up higher than expected. We've seen some economic data like GDP forecasts for this current quarter in quarter one of 2025. I think it's expected to decrease this quarter. It's either expected to decrease or stay flat. And so the point is, we might be seeing a slowdown in the economy, and we're still stuck with the inflation that we've seen over the last 5 years straight. And so that's where we're at right now. At the same time, though, the Federal Reserve is looking to potentially cut rates now in next month. With all this economic weakness, the market dips, and everything going on right now, the likelihood of a rate cut has gone up to almost 50%. This was at 10% a couple weeks ago. It's now at 42%. It was actually higher than this earlier. And so it's looking like we're going to get rate cuts earlier than anticipated now because of the weakness we're seeing everywhere, especially with all the tariffs. And again, the overarching catalyst for these drops that we've seen over the last 2 days is China announced additional, not net, but additional 34% tariffs on U.S. goods. So the trade war is getting serious. We're heading into the opening bell in about 20 minutes now, and we'll see what happens. So I hope that all makes sense. If you don't understand economics, that's what it all means. And that's where we're at now in 2025. So we'll see what happens with rates next month. We cover all these rate decisions. You want a one-stop shop that covers all this stuff live. Subscribe. We cover all this stuff. We stream it all live. You can watch it all right here. And we appreciate it. Meta just announced another AI model. They're nearing the release of new AI models after performance hiccups, according to the information. Yeah, I mean, people criticize the Fed for doing QE because of the inflation that we got from it to a certain extent. But again, if we didn't do QE in those moments and we entered a deeper recession or depression, what do you think people would have said? They would have said, oh, the Fed's sitting around not doing anything, guys. What the heck? Why are we paying these guys? Is what they would say. So like Jerome Powell, I do not envy him. That's a very difficult job. I mean, I envy his net worth. Don't get me wrong, which is like $40 million or something like that. But he gets paid $200K to be the Fed Reserve, and everybody blames him if things are bad. Nobody gives him credit if things are good. So, I don't envy that from him. But yeah. Can you give us some hints about CPI and PPI after all the tariffs are high? We'll have high inflation in the past few days. I don't know. When we look at, like, as an example of this, when we look at CPI next week, and CPI, again, does release on Thursday next week. It's expected at 2.8% CPI year over year, 2.8%. Regular CPI for March is expected at 0.2%. It depends. Now, this is CPI for March, right? So this is prior to April 2nd. Now, we still might have some inflation, but we'll see. It doesn't necessarily mean it's going to correlate with the recent tariffs that we've got on April 2nd because this is a month before that, the month prior to that. Market's down 21%. It's right on the cusp of market crash / correction. We got almost 3,000 votes. 73% say yes, it is. So. Yeah, unemployment rate showed up at 4.2% higher than expected. Bro, I see these cave divers and stuff like that, bro. What are they thinking, man? What are they thinking? Like, nothing could encourage me to go crawl around. I'm too claustrophobic for this. Like, I'm gonna go crawl around in a cave, dude? What drives people to do this, bro? The president said it's a great time to get rich, richer than never before. Adventure's cool, but like there's a certain amount where, you know, nah, I'm not doing that. I'm too claustrophobic, bro. I really, you know. How is unemployment up, but they are claiming that there's job growth? How does that make any sense? I'm extremely confused. Well, you got to understand the difference between the unemployment rate and payrolls. Payrolls can be looked at as business expansion. More people can file for unemployment as well as have high payrolls. Like, both of them are possible, you know. Payrolls are business expansion, you know. Yeah, so again, we got Tesla 255s. Like, so payrolls come from business surveys. That's why I call it business expansion. They track how many jobs were added by employers specifically, just to clarify. Unemployment is households, so it's how many people are filing for unemployment. AI just confirmed what I said, so, but I wanted to check AI to make sure I was telling people the right thing, but yeah, what I just said was correct. Unemployment rate comes from households. Payrolls come from businesses. All right, so NASDAQ starting to fall down a little bit here, chat. We got 15 minutes until the market opened. 15 minutes. Yeah, honestly, I watched that movie Everest, and I even told my wife, like, I don't know how I can watch that movie and still kind of get the itch to go climb Everest, but I do. I kind of want to go climb Everest. You know, I don't think I'm ever going to, because I think the logical part of my brain's like, bro, do not end up a milestone on that, you know, at the summit. Do not end up like green boots, like a milestone at the summit, you know. Like, people pass me by and be like, there goes the top 3 greatest mountain climber of all time. You know, just walk by. I just can't do it. But it looks kind of fun. I'd kind of like to do it. You know, my wife and I have been on a kick of, like, mountain climbing stuff for the last, like, 2 weeks since we watched Everest. Lowering interest rates is still not going to fix the issue. Yeah, well, the problem, like, is inflation related, right? So, the problem is that lowering interest rates might stimulate the economy to a point in which inflation spikes up again, and that's not necessarily what we want. Obviously, the reason the Federal Reserve is not, like, super interested in cutting rates aggressively, at least prior to this crash, is because the consequential effects of it on inflation, and we don't want higher inflation. That's not good. We don't want high inflation. We've already had high inflation over the past 5 years. I fear inflation more than everything else, including economic weakness. But yeah, All right, chat, we got 12 minutes. 12 minutes. We're under the 200 exponential on the 200 on the NQ here too. So. All right, we're gonna get ready to trade. So we're gonna put up NVIDIA here. 10-year treasury yields opened up today, didn't they? Yeah, they're at 3.9% right now, 3.9. I got the hiccups right now. Yes, the NASDAQ closed where? Let's see. The NASDAQ closed at 18,648. And it's currently at 18,180. Yeah, so I don't think I can trade on Top Step today, right? We're too close to a price limit, huh? Yeah, we got 9 minutes here. So we're going to trade, but not. All right, guys, NASDAQ's creeping down some here, but I will be right back, guys. I gotta grab my wallet here. And again, after the stream today, we got Jerome Powell at 11:25. So, yeah, here, I'll be right back, guys. Hold on. Hey. All right, guys. Can't find my wallet. I'm looking for it, guys. Hey, we got 5 minutes left. 5 minutes left. Let me go to a different one. Yeah, y'all just be careful with the opening bell, man. The market might dump, might crash, might dip. Y'all just be very, very, very careful. I'll be right back. I gotta find my wallet here. Hold on. All right, guys. I don't freaking know where my wallet went. It's somewhere. No, I'm not missing the bell. I'm here. Just to confirm for my top step traders, we're within 2% price limits, correct? So we are within those limits, right? We're not able to trade. I think, right? Look at Pepsi. Pepsi just spiked up, guys. We got 2 minutes left. 2 minutes. Pepsi just spiked up. Yep. All right, so look, we're spiking up at the opening bell. Look at it, Nvidia up to 99s here right now, 99s. All right, so we got a combine set up. We can trade. We'll try this one at the opening bell. But there's volatility today, guys. Y'all be very, very, very careful. Very, very careful. We got 45 seconds until the opening bell here, chat. 45 seconds. All right, guys, here we go. Look at this dip in the NQ. Here we go. Here's the opening bell at 15 seconds, guys. 15 seconds. Y'all be careful. All right, there's the bell. We're here today, guys. We're here. All right, guys. So far since the opening bell here, NASDAQ hasn't really gone anywhere. Microsoft's bouncing back. Tesla's bouncing back. We're watching Nvidia, gold, Apple spiking back up a little bit as well, guys. Apple up to 195.50, 195.50. Gold up to almost 3100s here, but Apple back up some. So is Nvidia. Nvidia almost up to $100, but I think $100 is probably a pretty big milestone level for Nvidia. Let's see if it is. But so far, rebound since the opening bell, chat. Rebound since the opening bell. All right, we are bouncing back up. We're at 18,230s. 18,230s. Nvidia testing $100 a share here. Apple up to 196, almost 197s. Palantir up to 80s. Tesla at 260s. I'm going to short this 10 micro contracts. Here we go. All right, we took that off. We just made 350. About 350 on that short. Nvidia turning. Apple turning a little bit. Let's see if it continues down. All right, so look at here's a turn at the opening bell, chat. A turn down. Apple spiking up, dragging the market back up some. Apple up to almost 198s. Now it's gotten retraced all the way to 197s. I'm going to short this 5 contracts here. Very small. Slightly green. We're going to take a piece of that off. Another piece of that off. There we go. We'll add to this one. Take a little bit off there. Take the rest off there. So yeah, we just made about 250 again. I'm gonna short this retracement too, just small size though. See if we make a little bit from this. 5 contracts. Slightly green, but that's a big spike up, so we're gonna have to cut that prop. We lowered some of the size here, but there we go. We're gonna take a piece off there. See, the apple is the one that's kind of hard to predict here. All right, there's a drag down. There we go. Took a piece off of that. Took a little bit more. See if we can add on this retracement too. There we go. Took a little bit more, but bad fill. Took a little bit more. There's so much volatility. I could trade with just 1 or 2 micros and actually get some pretty large returns from it. Yeah, we're up 5 on the day or so. Still getting that red action coming through. Y'all be careful. Quantum stock's falling down. He's expected to speak on the economy. Yeah, guys, we got a completely free Discord that doesn't cost a penny. If you want to check it out, I'll put the link up. A completely free Discord, doesn't cost a penny. You want to hang out with us after the stream ends, here's the link to that. Thought I copied the Discord link. Instead it was the old, all right, here. There we go. Here's the link for Discord. Check it out. Great with it. What the heck, dude? I just copied it. All right, let's try this again. Copy. Paste. Bro. Is Discord smoking? Quadruple click this thing, man. Dude. Copy it the old-fashioned way. There we go. Here's the Discord link, chat. There it is. All right, here's the downward pressure. Nvidia down to 97s. Apple is honestly popping up a little bit. It's at 198s. So again, here's Apple on the top right. Here's Nvidia here. We can also look at Tesla, which is getting deep red, down to 250s. The red definitely showed up this morning. I don't think this is a shocking thing, though, to most people here. And again, we're day trading on Top Steps funded account program. A great way to help support your boy here on this channel is to check them out. No PDT and futures. You can day trade the S&P, the Dow, the NASDAQ, the Russell, gold, some currencies. If you want to learn to day trade, do not fund your own account thousands of dollars trying to look cool. You are almost certainly going to lose a huge chunk of it, if not more. Try a funded account program. They give you a 50K demo. If you can make 3K without losing 2K following their rules, they fund you 50K, 90% split. If you fail, you lose 50 bucks, and then they give you a practice account with real-time data. If you were going to buy a practice account in futures with real-time data, real-time market data, it might cost in the same ballpark as their base challenge. The value's there. They've paid out almost $200 million as well, and this teaches you how to trade. It's really genuinely a good resource. The way I got funded here was I made 3K in profit without losing 2K first. If you want to check out the link, it's right there. Remember, Jerome Powell speaks today, guys. Jerome Powell speaks today at 11:25. We are going to stream that completely live on the stream. Y'all be careful. Be ready. I'm wondering if we're going to get choppiness leading into Powell today. I genuinely wonder if we're going to get choppiness leading into Powell today, guys. I know this is kind of crazy. I'm gonna buy this. Don't punish me. Don't do it. Don't do it. Okay, we gotta get out. Top 3 worst trader of all time ever in the world, man. We lost 220 on that one. We're still green, but I don't love to see it. I gotta just trade with the momentum. I had the mindset of like, hey, maybe we're gonna chop today leading into Powell in 2 hours. But then we just dumped under lows. See, now Apple's slowing down as Tesla's falling. Yeah, I'm just nervous. We're close enough to lows. Still breaking lows. Tesla about to hit 250. Put up Nvidia. What's Nvidia doing? Nvidia at 9660s. Amazon at 172s. JP Morgan says there's a 60% chance of a recession in 2025. All right, I gotta try to buy this here. It's a risk for sure, though. Oh wait, are we halted? Well, I thought we were halted for a second. I had to cut it. I thought that would trigger fear, but I guess not. All right, there we go. Kind of a 2 steps forward, 1 step back type of thing. It's a big turn though here. Amazon and Apple are kind of some of the stocks that are holding the market up, as well as Pepsi. So if Amazon and Apple start to turn down, you know, quantum stocks starting to fall too. I wonder if there's some good buys at quantum stocks. I'm using the 200 exponential. Tesla's still falling down under 250s. Coming back down to 18s. Remember, we got Jerome Powell today, guys. That is not small. Not small today. All right, here's a spike. I'm going to try shorting this now, and we're going to take some risk here. Just try to DCA into it a little bit. It's a combine account, by the way, so if we lose this, it's not the end of the world. It's $50. And I think if we're going to risk $50 on a challenge account sometime, it might as well be today. Now we got 3 contracts left. I'm going to add to this as it pops up. Basically flat right now, but I want to see a retracement. Wait, how much am I up today, actually? 400 right now. I gotta risk it, I think, here and add. The size is too big, though. I'm probably gonna get eliminated here, I think. See if we could come back down. Yeah, I got eliminated. It's okay. Again, if there's any account I'm gonna take a risk on, it's one of these. It's 50 bucks. I want to have fun at the opening bell, considering all the volatility. But yeah. I should have just waited. Top 3 worst trader ever, for sure. Honestly, we did kind of get a retracement down, too. Look at this. We did get the retracement back down, too. So yeah, we got it's almost 9 a.m. or it's almost 10 o'clock. We have about an hour and 35 minutes left, give or take. An hour and 35 minutes, give or take, right now. So but again, this is a $50 challenge account when we're already funded in 4 accounts. We just can't trade our funded accounts today. We're trying to have some fun. We shorted on a little bounce here, hoping it would follow through, but we ended up getting just a big rebound. And specifically Apple. Apple's about to run into $200 here. So. And again, we got Jerome Powell in about an hour and a half. So. I might cut it a little bit early today. And then wait, because we're gonna have to cover Jerome Powell in an hour and a half, chat. So do you guys think we close red or green today? Like, there's the rejection here. I should have waited for this 200 EMA right here, too. Look at this. Look at that rejection. Honestly, I'm pretty sure those rejections are pretty freaking solid. Those 200 EMA rejections. Crimson red. Odds are red. It's down 3%. Gonna bounce at least a week before we see green. Definitely red. I'll shave my head if we close green. Oh, I'm sure there's a great way to confirm. I mean, there's always a chance of green or red. You know, who freaking knows? But there's always a chance. And again, look, we might actually... Look, we went ahead and bought another one, and we'll play with this now, too. What does the chat think I should do here? If I get $1,500 today, $1,500 to Monday in this account, I get funded. I'm going to short. And again, we might just swing for the fences and play with this and then close it down since we're so close. Wish me luck, guys. We're going to short right at the 200 EMA. We're trying to get $1,500 one trade here. Top Steps funded account program. We got 40 contracts here. Ah, there we go. All right, we're going to try to add to this. There we go. We'll add a little bit more. There we go. Out. So we just made $1,000. We need 500 more. Short the little pop here, huh? I think that's what we should do. Short the little pop. I got to be careful not to go over my limit, though, here. I'm not going to take larger than 30. There we go. Actually lost a little bit on that trade. We got 20 contracts, though, so it's pretty small. There we go. Hey, we did it. We got $1,500. That's step one. If we get $1,500 on this account Monday, we get funded. But yeah, so we got it. So we're one for one. We made it on one. We lost it on one. But not bad. $1,500 in profit in about 3 minutes. I'll take it. Hey, guys, listen. If you want to check out Top Step, try to get funded with me. Link is in the description. I'm not an investment professional. I'm trading on a challenge account today because I'm locked out of my other accounts because of all the volatility going on right now in my short-term day trading accounts. So understand all these rules on screen. I have no freaking idea what I'm talking about. I love you all. Have a great day. Listen, guys, Jerome Powell is in about an hour and a half for Jerome Powell. About 1.5 hours for Jerome Powell. We will be streaming this live. We'll probably start streaming in about 45 minutes to an hour. Again, subscribe. Hit the notification bell. I love you all. Have a great day. Be safe. Nobody freaking knows. As much as you get the peanut gallery giving you guys all this, oh, the market can't go up. The market can't go down. The market has to bounce. The market has to crash. Neither of those things are true. Variance is real. It could go any freaking way the market wants in any given time. Jerome Powell speaking today at 11:25 Eastern Standard Time. We will be streaming it live as it happens. I love you all. Have a great day. We'll see you guys in an hour. Be good. Be safe. 1 hour. I'll see you guys then.